Thank you so much, Your Excellency, President of the Republic of Rwanda, and Your Excellency, President of the Republic of Zambia. It's a true honor and privilege to have you here at the Inclusive FinTech Forum, and we'll kick off this conversation to look at ways in which FinTech can accelerate financial inclusion, not only in our continent, but probably starting with a context. You are the new chairman of the Common Market of Eastern and Southern Africa, COMESA, and we know that in our region, although we've made strides in terms of increasing numbers of financially included people, we've seen the statistic earlier on in developing economies. In the last 10 years, financial inclusion rose from 42% to 71%. However, we know underserved communities, being the youth, women, people in rural areas, MSMEs, are not accessing financial services at affordable rate, are not accessing credit. So in your new role of chair of COMESA, what will be your key initiatives to really champion financial inclusion?
Thank you very much. I think the first thing really to do, I believe, would be to accept the fact that building on what was said by the colleagues that were on the panel just a few minutes ago, that we as a continent need to understand that in order to basically provide for our people, those of us in public office, private businesses, entrepreneurs here, we need to grow the market. We need to allow our businesses to grow to scale, a scale that obviously in the economic terms you call it economies of scale, but just the size that will allow it as a business to ameliorate the cost of delivering services, because as you grow, if you grow properly, you grow in a manner that is intentional, then you can also help basically ride over certain costs that you may not have been able to do that if you were a smaller business. Recognizing the importance of a niche player in the market. I think the point was well made here. So we as governments and then as a trading bloc, COMESA, I think need to understand that the basis upon which COMESA was created was to grow the market, to basically be able to invest, trade with each other in a significant way. And then on that basis, I think the coming in of the Africa Free Trade Area is a building block, a further building block to that. I say that because once we accept that premise, then we will understand the importance of allowing the growth of fintech in the sense, and other businesses, by the way, and accept that if that's a premise we agree with, why we created ourselves, then we need to support this growth of the market. How? A couple of examples or issues. Regulations. To get the regulations that support that agenda for growth, for scale. Now, it cannot be development of regulations. Let me rephrase this. Policy, laws and regulations. Policy to support this growth agenda. And it cannot be based on singular jurisdictions, countries. It must be based on cross-country, regions, the continent. Very important. So harmonization becomes important. Then, I think the overall issue around if the regulations are okay, which they are not at the moment. I think you heard the conversation. We also need to move in tandem with technological capacity. The technical skills is something, but the capacity is another. Obviously, they are somehow intertwined if you think deeply. But I'm making the isolation that the technical platforms must allow for that. The skills, obviously, to create these platforms are essential. The key skills to maintain, to sustain these technological platforms is equally important when the regulations, the policy, laws, regulations are harmonized. So I think these are the two critical issues that I wanted to pull in answering your question. But also, maybe the third, very important, but sometimes not viewed as such. You can't have governments walking in this direction and the entrepreneurs in the other direction. It is important that governments walk and work together with the private sector. And ultimately, leadership in government is critical. A lot of things don't happen because there is no leadership, there is no resoluteness. Please understand me. The physical presence may be there, but there's no resoluteness and intentional behavior, actions that would allow for the things that we want to happen. So there's need for strong leadership, clear, succinct leadership on the political public sector side. So is the case on the business side. Then it becomes easier for the two to work together towards that agenda. Thank you.
Thank you very much, Your Excellency. You rightly mentioned the need to harmonize across our trading bloc, COMESA, but also across Africa. The need for business leaders, political leaders to align. But what role, Your Excellency, do you see for technology to bring more people in Africa into the form of financial services?
Well, I think it's a straightforward answer, I do believe. Obviously, it's a panel, we're having a conversation. I think earlier we were talking about the importance of technology being an enabler, isn't it? Things we couldn't do before, with technological advancement we can do now. I think we must ensure that we continue to invest R&D to make the technology even better, to make it not just capable, but quicker. Don't we talk about high-speed internet? We may have the internet, but it's not fast enough. So this is why we need to continue making those investments. Certainly, technology cannot be replaced in this discussion, in this area of what we want to achieve. And it goes without saying that harnessing talent, younger people, become even more important because they are the ones who are more tech-savvy. And I think they have the basic skills that were not there before because of certain rigidities, such as the curriculum, in the older days. But now it's different, it's much better. And I think we also want to see more of universal availability of that technology so that we want to connect the market, make it bigger. We need, as we had, the tech-savvy young people in Benin to be able to talk the same language with those in Rwanda, in Zambia, and elsewhere. Thank you.
Thank you, Your Excellency. You mentioned about the need for technology to be accessible. But for the fintechs in our continent to also flourish, we need capital. Yesterday's sessions, Singapore shared with us their success story, where in 2015, investments in fintech were only $20 million. Today, they approach $4 billion. So what can we do as a continent to also stand out, to attract those investments that will unlock our fintechs that really solve issues we see on our continent?
I think two things, not to say too many things, but two things. One is that the public sector, the governments must actually create the environment to make it attractive for capital to flow our way. As you know, capital resources are always scarce. And I think they do flow, by and large, where they are wanted, where resources capital is wanted, where it's appreciated, where it's accommodated, and, I dare say it, where there's consistency. Where there is consistency. You can't be flip-flopping. We have an issue in our country, by just a way of example, where in 10 years before we came into office, the mining fiscal regime changed 18 times. I'm sure the business community think I'm joking. 18 times. Taxes, this regulation, that regulation. Mining is a long-term business. You can't change the environment so often and sometimes in a dramatic way, which affects the income statements, the balance sheets, ultimately the return on capital. So this is not an exception in terms of fintech. So consistency is important. That's one side. I think once you've done that and you have basically been trusted that you mean what you've done, because sometimes things are done just as a facade to create a perception that this is a good place to do business, temporarily only. And then earlier in the day, I want to be a bit, if you allow me, mischievous to say, earlier in the day in another meeting, we were talking about countries having to work hard to have a shared vision with the citizens of that country, such that when there's one change of a minister, of a regulator here and there, there's no fundamental shift in the way things are seen. Then you'll see that the trust levels increases. So let me put that aside. When we do that, before I do that, when we do that properly, I think capital within the competitive environment, within the various destinations that it can go to, will reasonably flow our area. Maybe not in month 6, maybe in year 1, maybe in year 2. I think it's important to understand that. On the other side, I think we as governments, as countries, together with the private sector, we must deliberately allocate capital in this area because we know the value and the importance of this area. Thank you. 2 areas.
So, Your Excellency, you touched upon really important points on trust, building trust, building trustworthy institutions, consistency. And maybe I'm taking a risk here as a regulator. We've heard the private sector panelists talking about the regulatory burdens from country to country in our continent. What would be your advice to really sort of address those challenges? How can we be more innovative as regulators and policymakers? What platforms should we create?
I think I've touched that already in a way. It is important that we are intentional to start with. We have clarity of intent. And once we are okay with that, the rest become easier, because with the clarity of intent, what we want to achieve, then the path, the walking path, the working path, whatever we want to call it, becomes easier. But let me argue in a slightly different way, that once we know where we want to go, we must also acknowledge that there will be challenges, there will be difficulties. When we face those challenges, we can then deal with them properly. As the English would say, would line the ducks in a row and chop their heads one by one properly. If we are not clear, first you won't bring the ducks in one row, so it will be difficult. Secondly, you may chop one. By the time you're on the third one, you get your emotions overrunning you, and then you change course. On a more serious note, I think that is important. And on the other side, it's also fair to say that, and I want to be, my colleague who was seated there was very helpful, and the lady that was here. But let me flip the coin now. We in the public sector, I come from the private sector. My life was spent in the private sector. But now that I'm in the public sector, I would like to drive a point very clear here. The private sector must take the lead and say what it wants the public sector to do for it. You can't have a generic wish list in these situations. You have to have, yes, a generic one, but drive down to specifics. And then the key areas. Just analyze the legal framework in your country, in our countries, as a private sector operator. See how it affects your business. Drill down to that particular law, that particular regulation, and then table it for discussion with those that are able to change that law, that regulation. That's what I would like to see more from the private sector. And then we can include partners.
Thank you, Mr. President, and I hope that the young entrepreneur here and fintechs, you've given them some tips on how to lobby regulators and policymakers. I hope they make good use of it. And in your address earlier on, you touched upon the need to really build capacity for our youth, create economic growth for the younger generation. So maybe as we conclude this chat, Your Excellency, if you could share with us your vision for the financial well-being of the young people here, but also across the continent.
Okay. This allows me the opportunity to say something I said when I was over there that I will not spend time on it. The first thing is really for young people, honestly speaking, is to accept that there's time for everything. When you are young, I think the best thing to use your time on is to acquire education, to acquire skills. And in this subject on the table, you want to move in this direction. I must also say that interest is of paramount importance, love for what you want to do. You want to be in this space, fintech, you need then to be able to have your generic skills acquired, quickly move into specialist skills that allows you to operate in this space. And I could say more, but I don't want to, I don't wish to. Love what you want to do. Don't be pretentious. Love what you want to do. Get to do the work that needs to be done in order to achieve what you want to achieve. I think that's very, very important. And resilience. Resilience is equally important. I think once the opportunities are available to the young people must make their choices, must work on those choices, and must also be willing to network quickly. Again, technology allows us to do that. What I couldn't do in my undergraduate days, because I was at a particular university, I couldn't network with students, my peers in another university. It wasn't possible. It was very difficult. But now the young people, again, technological platform, can network with anyone in the world. Literally, with anyone in the world. And that is a great, great opportunity and advantage for young people. The rest, which they can't do, I think others like ourselves, senior colleagues in business, again, public sector, those who have seen things, who have experienced things, we should be available to support our young people for them to succeed. Thank you.
Thank you very much, Your Excellency. I believe really the aim of this Inclusive FinTech Forum as a dialogue for policymakers, business leaders, entrepreneurs, to really look at issues that we're facing as a continent and really bring FinTech, but guide it or direct it to increase the livelihoods, financial well-being of our population is something that's important, and you really brought home those key points. So once again, Your Excellency, we wanted to thank you very much for joining us for this Inclusive FinTech Forum and for your words of wisdom towards policymakers, business leaders, but also us regulators. Thank you very much.
With pleasure. Thank you.